All right. Hello, everybody. Welcome back to another late night stocks talks. Chris is on the way. He's going to be here in like 2 minutes, maybe 3, maybe 4, maybe 5. Chris should be here very soon. But we're going to go ahead and get started and just wait for Chris and talk a little bit about what's going on in life. Thank you, 26 people, for being here already. Aaron, Richard, Alvarado, Gabe, Jackalope, Arvin, Cyberfam. Bro, I haven't talked to you in so long. Hope you're doing well. Hope you're here. Hope everything's okay, man. And yeah. So last time we did a podcast, Cyberfam, was like a year ago. So if you're down, we got to do another podcast, refresh, talk about Palantir, all that stuff. Ahad, what's up? Kane Frost, give me your stocks. Evening, gents and ladies. Evening. Amit, did you add any end phase today? No, I did not. I was waiting for end phase to go down to below 200, which I think we'll get. So did not add any of the. I don't think buying anything today was necessarily a good idea since the market was moving. Can you shout out my wife, Sarah? Yeah, last time someone told me to shout out their friend, I ended up saying something that wasn't the best thing to say. So I always get a little skeptical now, but Zion, I do think you have a wife, and I do think her name is Sarah. So Sarah, thank you for letting Zion watch. If you guys don't know what I'm talking about, it was, let's just say they put 2 words together that weren't the best. And I said it because I was like, oh, happy birthday to this person. Then when I played it back, I was like, that doesn't sound right. So shout out Sarah. I hope you're doing well. Damien, what's up? Joel, what's up? Jay Powell is at it again. So what did we think about this market, everybody? This was interesting. We got 25. We expected 25. And, after 25, the market rallied nicely. We saw everything go up. And then Powell started talking. Powell said, look, there's probably not going to be any more cuts in 2023. He said, if anything, we might pause or raise rates again. He stayed more hawkish on this whole 2% inflation goal that he has. And as a result, was just pretty indecisive about how he feels, other than the fact that inflation is bad, and therefore decided to continue to be, not the most nicest when it comes to what he's going to do with the market. And as a result of that, the market decided to tank right after, and we saw everything go whoop, straight down. We had end phase at like 211 go right to 200. We had the S&P come down. Pretty much everything came down as a result of that. Market is dropping tomorrow. Canada paused raising. Yes, Canada did pause raising. I am really looking forward to the market dropping tomorrow. You get a little bit of FOMO, but then you realize, the market is the market, and you're going to get an opportunity to get better prices. And I'm very excited to pick up end phase at 180 again, or even 170 if we can get there. Very nice to pick a Palantir at 7 again. So, we'll see. We'll see if we can get there and then go from there. Sounds like they had no clue what's going on with the economy at all. Again, Powell has a really tough job, and I think we all understand that Powell has a really tough job, but it's, it looks like inflation's coming down pretty significantly. And if that is the case, there's just at least, it wasn't 50 because we don't need 50 if inflation's coming down massively. The true inflation estimates put it at 4%. Generally housing, food, shelter, all that stuff is coming down. So we're going to see what happens, but it looks definitely like we're in the beginning, or hopefully the end, of a bear market and beginning of a bull run that may take time to get to. It may take another 7-8 months to see any of the bull run actually manifest itself in a meaningful way. Like, we might just be flat for a while because the market doesn't like what's going on. But there are some stocks that have done phenomenally well over the past. Nvidia is up 100%, more than 100% over the past month. It's insane. It's absolutely insane. I can't believe Vitaly has brainwashed you. Okay, so hold on, Gabe. Do you still have puts on the market? Because I don't, like, did you close your puts, or do you have puts on the market? And if you still have puts on the market, are you saying the S&P is still going to 3,600 or 3,400, whatever you need to make a profit by June? Because I'm assuming you still have puts on the market, right? Because if you don't have puts on the market and you're being bearish, why are you being bearish if you don't have puts on the market? Let me come on and I'll explain. No, we're waiting for Chris, and we'll have you on a separate episode, like an actual episode when we plan it. But, like, do you have puts on the market or not? Because I don't get how you can be so bearish if you're not even putting your money where your mouth is and you have puts on the market. I would assume you still have your puts on the market, right? Because you have puts on Nvidia. But if you don't have puts on the market, then maybe you're feeling a little bit of what I'm feeling, that inflation's coming down. And I don't think it's being brainwashed into being bullish on end phase. I think end phase, the story of it makes a lot of sense, and DCAing into it is not a bad idea. But shorting the market for months and then the market not coming down, short answer is no. I closed all of them at a perfect time. So I'm assuming you didn't take a loss on them. You can put it in the chat.
What's up, dude? Sorry about being late.
No, you're good. You're good. I was talking to the audience. Tonight, we're green.
Okay.
We were green a little bit, but then we had a little bit of red.
Dude, I don't get one thing. How come, like, you ever, like, are about to leave your house and then all of a sudden you got to take a shit, or you got something important coming and then you got to take a shit? Like, it happens to me way more than I'm, like, used to, It's like literally I have nothing to do all day, don't have to take a shit at all. The minute I have to leave the house to do something, it's like, you know what? Nature's calling. Let me get 5 minutes in.
So you had to take a shit. That's why you were late.
Pretty much, yeah. I was like rushing, and I was like, all right, I got to get this one out. But like it was such a good shit that you didn't want to like leave it. Like I could have pinched it off and got on the call, but I didn't want to. I was like, nah, this is one of the better shits that I've had this week, so I'm gonna keep going. I was like, screw it.
You've got to take good shits. It's healthy. If you don't take good shits, it's not.
Dude, you know the difference between like okay shit, like, oh man, I didn't drink enough water yesterday or something, and then you had like a really nice session,
Yeah.
where you got like a nice 5, 10. Well, what's the average time you stay on the shitter? Like, what's your average time?
Probably 10 minutes. I'd say
10 minutes. Yeah, I'd say about 3, maybe 4 Candy Crush sessions.
Wait, you still play Candy Crush, bro?
Yeah. Candy Crush, bro.
Gosh.
Candy Crush. Sometimes I'll still play Angry Birds too, but Candy Crush is where it's at. Yeah.
Honestly, I'm on Twitter during the time. Like that's probably what I'd be. I pull Elon Musk on that. Yeah, no, I feel you, bro. There was one time I had to do it before the morning open, and I was just like, "Fuck, bro, I can't miss this." But like, it's the worst moment that it happens, right?
Mm-hmm. Yep.
Okay, so what was your reaction to 25 basis points and what happened today with the Fed?
I mean, it was expected, right? So that's why we kind of rallied a little bit. But man, the commentary by Jay Powell was a little rough. He was like, don't expect cuts for the rest of the year. We ain't going there. And then the market was just like, what? What do you mean? I thought we were going to cut a couple of times. And so that was like a aha moment for a lot of people. And that just really sent the markets into a tizzy. So, it's a part of how the Fed is going to have to be, where they can't be overly bullish, but they also can't be like overly bearish either. So the actions that they took were in my opinion, somewhat bullish, because inflation is still running hot, but they didn't raise it by 50. They only raised it by 25.
Yeah.
But the commentary was a little harsher than people were expecting. But I do like this Jay Powell that's at least more what's the word? Consistent with his messaging, that they're going to be data dependent and everything else. The only thing that I'm a little bit worried about now is that what kind of systemic risks are there in the market that may force his hand on basically pausing? Because I feel the entire time I was watching, I was like, what is he not telling us? That's what I felt like. Like, what does he know on the inside that he can't really say out loud?
You think he was talking with like a feeling that he knew something that he can't say?
Oh yeah,
kind of heard it in his voice.
So I think he knows that the what is that thing called? The credit markets are tightening up a lot. So the amount of lending and borrowing that's going on is going to take a hit, which means that the general economy is going to take a hit sooner rather than later. The question is, what does that mean for like the markets? Like, because we're investing in the stock market, of course.
Yeah.
In the short term, I still think that there are pockets of opportunity, but it might not be a bad idea to go a little bit defensive and to hedge your positions on things that are, a little bit more speculative in your portfolio. You know what I mean?
Why? But if inflation's going down, kind of, why do you feel a little bearish on what might?
Well, a couple of things. there are some things that he highlighted in his commentary that showed that maybe some parts of the economy and inflation wise is becoming a little bit more stickier than normal. So the one that he specifically like called out was non-shelter services, right? Those are like one of the leading areas that he was really like adamant on, that hey, unless non-shelter, so people need to stop spending. How do you get people to stop spending? Well, people still have a lot of money left over from COVID, apparently, and services inflation is really high. So, how do you get people to stop? Well, the unemployment thing has always been a question. You know, like more people have to be unemployed in order for inflation to be controlled. I think we're still seeing a deceleration in inflation, but probably not as much as they were hoping for. And I don't know, man. I this whole thing left me a little bit confused, but also at the same time a little bit more okay. I'm definitely gonna listen to it again. Like maybe I missed something in the first couple of rounds that I should have picked up on because I did a very like just basic understanding. So yeah, I'd say it's a good idea to stay a little bit on the defensive side. I'm still gonna be a net long, but I think I'm gonna cover myself with some puts where I can find them on the
On
cheap.
what? On all
Uh-huh.
your positions or?
Probably my more speculative ones. Like if a company that I'm buying has a high PE, right? Even if I think that the growth is going to be really good over the next 5, 10, 15 years, whatever. But it's in overvalued status. Like look at as an example, like like Microsoft, right? I have some Microsoft. Microsoft's PE right now is 29. Everyone is hyped up about the AI craze in it. I'm hyped up about the AI craze. I see the utilitarian use of it, but I can also see the market dumping. So what do I do just to be on the safe side? Well, I could buy some puts, you know. Someone's like, "Oh, you can sell some calls." That's true. I could sell some calls, but I don't want to be in a position where I end up taking that premium and it goes way below the premium, right? Whereas a put, I know that I have a fixed downward angle that I don't have to necessarily worry about too much. So I'm more like I know some people will do like in the money covered calls, which are fine. That's whatever you want to do to hedge your positions. Me, I typically want to just buy some puts that I don't have to worry about. And I think the summer is probably the most it's going to be the most telling. So I'm seeing a lot of credit market tightening, where basically like lending is pretty much like really hard. So unless you have some amazing credit, a lot of collateral, the banks right now are not going to be lending you too much money. So yeah, that's definitely gonna impact the economy. So yeah.
Yeah, I thought it was really interesting. I mean, when the reporters were even questioning him, it was like he's like, I can't say more than I already know, right? He was trying to be very defensive with his words. And 25 again, 50 would have been decisive, pausing would have been decisive. So they went in the middle, and I think they're really going to see what happens next month with inflation before they decide to raise again. But if I had gun to my head right now, I would bet they pause next time if we get inflation down to like 5.6, 5.7%. I don't think they would raise again.
Based on my projections, we could slow down to as much as 5.4, which is bullish, like
Yeah.
really bullish, right?
Yeah.
But at the same time, how much of that inflation is becoming entrenched into the general economy? The question is not so much that are we going to see inflation lower? I think we will, but it's at what pace and which sectors are we going to see the deflation starting to creep up? And those things, how sticky are that? How sticky is that that mix? So I don't know. I personally want to see more shelter come down, right? So basically all the multifamily housing that's being built, I want to see more single family housing being built so that this way, you know, economy aside, people need places to live. Right now it's really unaffordable, man.
Gabe is calling you delusional.
Yeah, he called me that too when I said that it was going to be around 5.9 to 6. And Gabe was like,
Yeah.
no, inflation going to be 6. So
Gabe,
he
you
can
said
say
inflation
whatever
would
he
be
wants.
6.4. You said it would be flat month over month. Like he said
Yeah.
it literally would not go down. Or 6.7, whatever it was at the time. We're at 6. No, we're at 6 now, right? So he said it was going to be 6.4, and then we went down to 6.
Gabe's like our personal Jim Kramer, man. Keep coming up with those.
Gabe, I love
Gabe.
you, but you were wrong on the last inflation one, man. You said it would be 6. You said inflation would not go down month over month. And like, I think everyone and their mother knew inflation was going down month over month. Like, we knew it was coming down.
Yeah.
All right. Well, maybe you
so
are delusional.
So DRK put something very interesting. No way builders are going to build more with interest rates in this market. Normally, I agree with you, but I don't know if you saw this, but there are a lot of incentive packages right now that the federal government is giving out to build more. One of the reasons why we're seeing a tremendous amount of building is because of a lot of the subsidies and grants that are being given out by the federal government. So, yeah, it's just one of those things that's going to happen.
Okay, we have some breaking news we got to get into. I don't know if you caught this while you were on the shitter by any chance, but Coinbase is getting sued pretty badly. So today, Coinbase received a Wells notice from the SEC focused on staking and asset listings. A Wells notice typically precedes enforcement action. 2 years ago, the SEC reviewed our business in detail and approved Coinbase to go public. While we understand that this is all part of the journey to reforming our financial system, we are right on the law, confident on the facts, and welcome the opportunity for Coinbase to go in front of a court. In the meantime, Coinbase will continue to do what we do best. And I think he explains a little bit more here. Or no, sorry. Let me put up this article. Share this tab instead. Coinbase shares fell nearly 12% in extended hours. And a Wells notice typically is one of the final steps where the SEC formally issues charges. It generally lays out the framework for the regulatory argument and offers the potentially accused an opportunity to rebut the SEC's claims. Coinbase founder sold 29,000 shares yesterday. CEO and founder Brian Armstrong, and Cathie Wood, someone tipped her off because her ass sold 160,000 shares, and 160,000 shares is a lot. So, and it's not like she moved that money somewhere else yesterday. She wasn't buying heavy, so someone told her something. Jason tweeted that this has been his issue with Coinbase for a very long time, or crypto in general, which is that the USFG, the federal government, if they feel like the dollar has any threat by any other asset, they'll just do what China did and they'll just get rid of that other asset. Do you think that's a concern for Coinbase now?
You know, I'm not nearly as versed in the crypto sphere as other people are. So I'm probably like the worst person to ask about this. All I know is from a balance sheet perspective, the last time I looked at Coinbase, they were undervalued. Their balance sheet looks pretty healthy. They had a lot of cash on their balance sheet, but that doesn't mean that they don't have like systemic issues in the background that we don't necessarily know about. And also the punitive damages from their operations the punitive damages from any legal enforcement could hinder their operations, which in my opinion is always a sign that you should stay away. You know, even anytime I've seen companies that are doing really well, their balance sheets are great, all that stuff, but they end up getting caught up in some form of enforcement action, either that there's something wrong with the reporting, there's something wrong with how they do their business, and whatever mediation that they typically use to like correct themselves ends up screwing over the business model that made them successful in the first place. So it's probably just one of those things that I avoid. I've never been a big guy on crypto. I see the utility in crypto, but I don't see the value in crypto. So I have probably some, like, I had Bitcoin at one point, like a little bit of it, not much. That's all.
When did you have Bitcoin? Like years ago?
It was like no. It's like a couple of years ago. I just bought it speculatively and bought in, got out, and then I bought in a little bit and I just relaxed with it. And then I was just like too lazy to ever check my Coinbase account. So yeah.
Yeah, I mean, this is the reason I never bought Coinbase and crypto. And just like you, I don't know the most about it. And I'm learning a lot more about it, but like I can't even explain what proof of stake means. Right. And that's like a core concept you're supposed to understand. If you own Coinbase stock and you can't explain what is proof of stake in the crypto world, you don't know what the hell crypto is, right? You don't know what Bitcoin is. You don't know any of this stuff. And like, I feel like go ahead.
To me, it sounded like a Ponzi scheme. Like staking
it still sounds like a Ponzi scheme to me. Like
crypto,
the whole shit is fucking dumb in my opinion, but it's speculative.
Yeah.
That's all it is.
The concept of staking, especially like some of the rates that were coming off of it, like you were getting, I think like a 40% return with some of these cryptos. I was like, man, what kind of goddamn return is that? That's
my
crazy.
Understanding. You were borrowing assets that weren't yours to return them and then borrowing them back and still getting a spread. And it made no sense, but it was working for people for years.
Yeah.
And,
I don't know. Yeah. I like I said, to me, it looked like a Ponzi scheme. The minute I saw the returns that some people were claiming and generating, the first thing to me that comes to mind is, wait a second, either you're doing something highly illegal or there's just something fundamentally wrong with the business that no one is seeing. But yeah, you ever heard of the term, like, if it's too good to be true, it probably is? So yeah.
Yeah. Gabe is upset at us now.
Why?
He says, you know what? At this point, F you guys. No one else shows their positions. Most YouTubers just stay middle of the road. So because I'm not bullish, you promote. It's not about saying middle of the road or not. I think in general, you and I are bullish and we're long on the market. And we're happy when the market goes up. And when it goes down, we're not praying for it to go down. We buy our freaking stocks because we want to increase our positions. And that's, I think, generally the most healthiest mindset to have. When you're preying on the downfall of the stock market, you could be right, but then you end up in a Michael Burry situation where if you're not right, when are you going to be right? You know?
Yeah.
And I think that's the overall problem with being net. It's not like a problem with being bearish. That's fine. You know, I'm bearish on Netflix. I'm bearish on Spotify, right? I have individual stock. You're bearish on you're bearish on TikTok in general, right? We can all be bearish about things, but when you're bearish on the US economy writ large, then you end up having to be in a Michael Burry situation where either you're right or you're wrong. And it's hard to be, you know, in that situation.
Yeah. I was just
what?
on like on a live stream right before this that Futbucker put to us on Twitter. So I was listening in, and actually that was like one of the areas of the economy that I was starting to get worried about. And I'm glad these guys were on, and they made some really good points. So basically, if you looked at the car market, like especially used car and regular car, there's been a lot of borrowing, and a lot of defaults are starting to come up. And this year, I think within the first couple of months, there's almost like 400,000 repossessions, which is like at just a crazy high. So we may see a lot of issues in the credit market when it comes to auto loans, which might end up, 400,000 repos in the last 2 months, which is crazy. So at this point, the question is, we as investors, how do we interpret this? And then on top of it, how do we make money on it? Well, the first thing I tried to look up was credit spreads. I mean, not credit spreads, credit default swaps on ABS products from auto loans. So basically, when you remember in 2008, where basically you take a whole bunch of mortgages, you put them together, and you create a product, an MBS product, mortgage-backed security, and then the banks would sell that, and the revenue that you get from it would be paid to investors. Well, it's a very similar thing with auto loans, with something called an ABS, an asset-backed security. So basically, all of these auto loans, they get originated and they get sold to investors. And people make money on it, which is good. The problem is, if those auto loans default rapidly, that means that ABS could actually end up going down, which means that there could be a lot of money on the default swaps. But I didn't see any instruments on the market for it. So if anyone knows how to buy short some ABS, by all means, let me know. If there's like an ETF or something that's short on it, I'd love to actually do some research and possibly get them. But I think the auto segment may end up taking some hits this year, which means shorting some individual auto names might not be a bad idea. Because if a lot of these repossessions come in, and the credit market tighten, that means that the sales figures that they had the last couple of years won't repeat, and you'll see dramatic declines
Is
in
Tesla
sales.
included or excluded in that?
I'm glad you asked that question, because that's the same thing that came to mind for me too. I was like, we have this transition between ICE to electric. And so I know a lot of people are switching to electric. The question that I have is, will this impact Tesla sales to the point where it's noticeable? I don't know. I don't know if I really don't know about Tesla. I do know that anyone who's in the ICE industry, they're probably going to get hit, But like I said, I'll do more research on it. Probably talk to Futbucker on it, because he seems to be a little bit more knowledgeable.
We got to have him on the show one day, even if he doesn't have his camera on. First of all, I want to hear his voice. I want to actually talk to him.
He's from Long Island, so he's probably that Long Island accent,
like Long Island. Yeah, bro. He also he invested in Aldea. Like I want to talk to him. He's a dope dude.
Yeah.
And just
he's a firefighter. He's a firefighter from Long Island.
And he trades stocks, bro. I want to know if he makes more trading stocks than he makes as a firefighter, because he's like trading stocks all day and he's doing crazy swing trades and shit. And it's pretty dope. It's pretty dope.
I've spoken to him quite a few times, and I can tell you, he knows what he's doing. He really does know what he's doing. Mark asked a good question. Should we short Ally? So Ally is probably one of the biggest originators of auto loans. I
First
have
of
to
all, shout
look
out
at
to Mark's profile picture. That's a
yeah,
sexy profile. That's a nice profile.
yeah.
Okay, go ahead. Continue.
I gotta look into their financials a little bit to see how much of those loans they're holding on their books. I do know that they have a ton of money in credit loss provisions, though. So, yeah, that's something to just keep in mind. So I don't know. I'll have to check out Ally, but Ally would probably be a natural like area of weakness in this market. So if Ally took water on, yeah, you best bet we're gonna have some bad days ahead of us in the auto segment.
Oh, sorry, I was muted. Buffett
Yeah.
owns a lot of Ally, right? Yeah,
Hmm.
Buffett and Howard Marks
Yeah.
owns Ally.
Yeah.
Okay, cool. Um, Bill Ackman. So I want to ask you this question. Okay, Bill Ackman went on a podcast the other day. I like Bill Ackman a lot. I know a lot of people don't like him, but I respect his investing mind a lot. He was telling the story about how he raised his first fund. They raised $3.1 million, and they went up to one of the guys who they wanted $500,000 from. And the guy was like, I'm not giving you $500,000. You guys are just a bunch of kids. But they told him what to invest in, what to short, what to hedge. And a year later, the guy took his advice and he made a crap ton of money. He was up like 92% or something. And he went back to them. He's like, ethically, I feel like I have to give you guys money now because I took your advice. So Bill Ackman's one of those really interesting people. I also thought he was absolutely correct on his short on Herbalife. For those
Mhm.
that saw that whole debacle with him and Carl Icahn, he was right. Herbalife
Yeah.
survived, but it is absolutely an MLM. If you watch any documentary on it, Herbalife is a huge scam. Now, he was talking about his $400 million loss on Netflix. I want to ask you a question. Netflix, when it was at 160 and then ran up to, or he sold it at 160, but then it ran back to 300, which is where he bought it at. So if he had just held on for a couple of months, he wouldn't have had to take the loss. Do you think that Netflix is sustainable at 300? Do you see the downside going back to 160? Because I personally don't. I think they're back in growth mode and either they're flat or they're going to continue to grow. And it's trading at, I think, 100 something price, 100 times or 150 times price to free cash flow. Disney's at 94 price to free cash flow. Would you be interested in buying Netflix at all at this price?
I wouldn't. I wouldn't. I think they've had a point where they've really been able to scale up a lot. But no, not at these prices. Just it's really well, I wouldn't say it's overvalued. I think it's fairly valued, which means that to eke out any money from Netflix, you'd have to get them to perform exceptionally well. So no, there are some levers that Netflix can definitely pull in order to gain profit, to become more profitable. Cut, but they're the whole business model behind Netflix is one of mutually assured destruction when it comes to a lot of content, right? So imagine right now you have Paramount Plus, you have Disney Plus, you've got fucking X, Y, and Z now. So it's almost like a race to the bottom because now you're competing for content from all these other providers, and now everyone is cutting into your watch time. So like
But
I
don't
was
you think
watching.
that's where the opportunity is? Because eventually it's going to consolidate because a lot of those platforms are trash at the end of
So
the day.
so I'm glad you said that. So I agree. I think that's one of the areas that they can actually capitalize on if they're able to maintain high quality content at reasonable pricing. And their competitors like Disney right now is still losing money on Disney
Disney
Plus,
Plus is
right?
bad. Yeah.
There's a lot of streaming services that are not profitable to their core businesses, like Amazon Prime. It's literally used to sell Prime subscriptions. Otherwise, if you just look at it from net, I think they would be losing a shit ton of money. So, yeah, I do think that if there was some consolidation, that would definitely help Netflix because then it would let them raise prices. But prices have gone to the point where I think it's starting to get kind of ridiculous. And now they're trying to do this thing where they limit like the amount of screens that can watch Netflix to a certain geographical location. And I don't know. I'm not a big fan of that. Like back in the day, they used to be like share your password with as many people as you want. That's how they gain
When
traction.
interest
So
rates went up.
yep. So, but to me, it's just I think they have a problem with spending rather than a problem with gaining users basically.
Yeah, because they have to also specifies, which is not a word, but their content across the world, right? India's content is different, South Korea's content is different, and that's
Hmm.
a lot of money in a lot of different ways. Joseph Carlson thinks I don't think he still thinks Netflix to 700. I know he bought it at 690, and I confronted him about that when he came on my channel. His argument is the same as the argument I just reiterated in 5 seconds, that everything is going to consolidate and eventually Netflix is going to win because they have the best content, which he could be right about. It's just a question of, do you think they can double to get to 700 at that point?
Yeah, I think in today's market, you have to look at companies, but then also look at the opportunities you miss out on being with other companies. Like Netflix is being fairly valued means that in the next 5 years they could double, right? Which is great. That's awesome. But at the same time, there's other companies that could probably 5x. And so do you want to be in the 5x or do you want to be in Netflix? And Netflix has to execute well to get to a double, whereas other companies probably just have to just exist and do really well in their current market segment. So, yeah.
Yeah. Matt giving his Tesla bearishness. He says Netflix is like Tesla, shrinking margins, more competition, but they were the first mover, so everyone is all about their brand. I would disagree with that, Matt. I think Tesla is much more than just their brand. I think they're just the best EV out there, and they will continue to be the best EV out there. But it's not a horrible comparison.
Well, you also have to take into consideration another thing, which is Tesla is branching out into other segments that are not related to their core business. That gives them the ability to expand out their total addressable market, right? They haven't even hit penetration of more than, I think, maybe 5% total in like the US. They're expanding all over the world right now. So there's a lot of opportunity for Tesla to grow in its auto segment. But then there's also its battery division, the one where you can have utility scale batteries. You got their charging infrastructure. You got so many other things that are coming down their network, and they're all vertically integrated. So I think a comparison between Netflix and Tesla is not a good one. Like Tesla has more verticals than you would believe, and I feel like every other year they're coming up with another vertical. Like when I was watching the Tesla, like the Investor Day, right? I think maybe a third of everything that they showed was about the cars. The rest of it was about the technology behind the cars that they can use to like do other things with.
Yeah.
So yeah, I think yeah.
Shell, BP, Exxon, Chevron have tens of thousands of potential charging stations nationwide. I've changed my mind.
Yeah, but how many of them ever actually work 100% of the time? Like, dude, ask anyone who's had an EV and they'll tell you the horror stories between Electrify America and some of the other non-Tesla branded charging stations. Like, they have a confidence problem. Honestly, they have a big confidence problem.
We have to disclose Matt works in oil and gas, so he definitely is a little biased there. And we can tell you're biased, Matt. But, he could be right on that argument, maybe.
Well, to some degree, I agree with Matt that we're nowhere near the end of oil and natural gas. Like, I think a lot of people are calling the death of oil and natural gas a little too early. It's going to be a while before oil and natural gas, dissipate. So, but yeah.
What was my next thing I was going to ask you? So you made a tweet today. I stalk your Twitter, so I see all of your tweets. So I get all your tweets in my feed. They pop up. The algorithm knows I like your tweets. Okay. You said ChatGPT is better than Bard AI, but you own Google. Can you explain what's going on? Why is this the case?
So I got access to Bard last night, and I
wait, how'd you get access so quickly?
I don't know. I just had access. I got the email. I signed up, and then I got an email saying, "Hey, you've got access." So I was like, "Okay, this is great." I don't know. Okay. Did you get access yet?
Well, I didn't sign up for that shit. So it looks so lame, bro. I didn't even want to sign up for it.
So I signed up with it and I started using it. And then I started doing side-to-side comparisons between certain things with ChatGPT and Bard. And dude, there's a noticeable difference. Like, it's not even like, okay, yeah, maybe a little bit here and there. ChatGPT just blows them out of the water with so many things. The accuracy is just on another level. I mean, I can understand some hallucinations because that's what happens with LLMs, but Google's hallucinations were just on another level, dude. Like, and I tried refreshing like 5 times and I would get 5 different answers. It was really bad. And then I asked it to write some code for me and it was garbage. Like the stuff that they wrote was complete trash. I asked ChatGPT within the first time the code worked. Like, it was awesome. So I think Google is, I don't know why, but Google is lagging. And the release of this Bard is not necessarily the greatest thing because it's just going to, how do I do it? They're trying to play catch up now, which is kind of sad because they were the ones that actually pioneered all of this stuff. So I don't know.
Yeah, I mean, I saw some of the demos. It didn't look that exciting, and I trust you when you're saying. I mean, obviously, I got to try it for myself. But if you're saying there's a notable difference, that means like the literal answers you're saying we're not better than what ChatGPT was
No.
giving.
And I felt like the entire time it was trying to lead me back to Google again. It was
Really?
like, yeah, it was just like, oh, I'm giving you false information, so you have to Google it. And literally, there was like a Google button at the bottom every time you answer, so you could just like Google, you could Google it and get the Google answer. I was like, bro, if I'm asking you, why the fuck am I gonna go back to googling shit? Like, you're like defeating the purpose, man.
Okay,
You know?
so let me ask you this: if ChatGPT does win, and when I mean win, I mean it takes a decent amount of market share from Google, even if it's like 2%, which is bad. How do you think Google competes if the ad business declines? Like, I'm not talking about how do they monetize search. How do they make additional revenue streams like Microsoft has made and diversify away from ads if ads start to decline? Because they still have to show growth. And if Google Cloud is not growing as much because, the whole sector is not growing that much, what do they do?
Well, Google still has a commanding market share lead in the search segment. I tried Bing, and Bing still sucks. Like, go try to search anything on Bing. It's just a terrible UI experience, also. So Bing needs to somehow figure out its way around that. But Google still has a large search market. They also have YouTube. They also have other properties that they make a ton of money on. They're still like the second largest app market in the world. Well, technically the largest with Android. So
Yeah.
there are a lot of things that Google still has. Google Maps, the monetization of ChatGPT and its functionality may not necessarily come to the general consumer. Where I think products are going to be made for the consumer in mind, but with the back end of ChatGPT, which won't necessarily affect Google at all. I just think that this definitely is like a decelerator for Google in terms of value. Whereas in Microsoft, it might generate them more value in the future where you have like LLMs like ChatGPT and everything else being integrated into other software, where basically you create a software that integrates your ChatGPT API, and then based on the product that you develop, Microsoft gets a small cut every time you query. Right. So
Yeah.
it's AI as a service. But then again, there's other AIs as a service players that are probably going to come up too. I don't think that this is a market that's just going to stay stagnant. So, where do I want to be in all of this? I'll tell you, I want to be in the hardware or the picks and shovels part of this, which was, I told you, Supermicro and Nvidia. Nvidia would be the prime candidate to benefit from this until AMD, Intel, and some of the other semi manufacturers catch up. And yeah, and also the cloud providers themselves have their own AI chips that are coming out too. So, I think to say that Nvidia is going to hold this market share forever in AI chip computing and they're going to be the primary guys benefiting it, I don't think so. I think it'll take some time. On the other hand, Google's valuation is very, very very compelling right now. Considering how much cash that they have, they're still generating so much more money than people want to take into account, and they can do a ton of buybacks. So, in terms of share price, they're still undervalued.
Right. All right. One last question for you, and then we will start the last 15 minutes of asking questions in the chat. It could be about life. It could be about stocks, anything. So go ahead and we'll get to those questions. When are you going long on FRC?
I am probably not going to. I was looking at some of its debt because that's where I found the most interesting thing. So debt gets priority over equity every day. So basically what happens is if, let's say, FRC goes bankrupt, debt holders get paid out first, right?
Mm-hmm.
So right now you have all these all the banks that put money into FRC right now, they're basically going to be footing the bill of my bond purchase if I buy a bond. But even then, I'm not 100% convinced. But the bonds are probably where I would want to be, in terms of investing in like FRC and some of these other financials. Equity probably not necessarily the case.
It was up 30% today, and it always looks like, maybe I should just throw 1,000 in there, see if it can just double. But then again, it's like, as you said about how equity shareholders are, it's a complicated thing to want to go into it, especially when the day that $30 billion was deposited in by the biggest banks, it went back down. It's like that wasn't enough confidence for the market to feel that it was good enough. So you don't know when the market's gonna eventually give it the love that it needs.
Yep.
Okay. Questions from the chat. Do you think Intel will recover?
Yeah, I think eventually they will. Pat Gelsinger is a really good CEO. He knows what he's doing. It's just it's going to take a lot of time for them to do it. Like these turnaround stories and semis are not something that you can do overnight. They have like product roadmaps that take 5 years to develop. So anything that they do research on now, it'll take like 3 to 5 years before they come out and they're to do that. They are making GPUs.
The head of their GPUs just retired though. They left.
Yeah.
Right?
That's fine. The guy 7CT Jorg whatever, he put that they're making CPUs. Yeah, they're the third in market when it comes to CPUs right now, but their CPUs still suck, like really bad. Yeah.
Okay. Cyberfam said, "Never know, man. Credit Suisse bond soldiers got erased. That was scary." Yeah, and I think that's what Chris was saying, right, about FRC.
Yeah.
That's the scary part.
So the Credit Suisse situation is really different because Credit Suisse bondholders, the A1T bondholders, they were like, when you buy those securities, like it's in the prospectus that you are actually lower than equity. And also under like nationalization rules, that you don't get made whole. So even among bondholders, there's different levels of classifications as to how secure they are. The most secure bondholders are typically first lien credit holders. So basically they own the rights to the property if you go bankrupt, right? So those are called first lien. And then after that, you have something called second lien. Second lien holders are subordinate. So basically after the first lien has been paid in full, then comes the second lien. And then after that comes unsecured holders. And then after that comes preferred. And then after that comes...
And you're saying the reason you don't want to buy FRC is because you think you're not going to be a secured bondholder of the company.
Yeah, because they could. So I have to look up what first of all, secured bondholders, you need to be, usually those are like hedge funds and institutional money. So they don't freely trade on the market. Okay. Like me and you we can't buy first lien debt. It's just not a thing. We can buy.
If FRC went under, those people would get rewarded first. So they would get made whole first before shareholders like you and me.
Yeah. So FRC is there, not FRC, sorry. So first lien holders, typically we can't really buy as retail stockholders and all this other stuff. We can't really, I mean, technically we could, but we can't really buy first lien debt. Okay. It's just not a thing because the amount of money that you would need to give to buy first lien debt is really expensive. So that's the first thing. And it's a very illiquid market too. Like there's not many people selling that debt. It's usually institution to institutional money negotiations. The closest that retail ever gets to getting into the debt structure of a company is either they're in the unsecured side or in an ETF that holds the first lien debt, or a company that they invest in that could hold first lien debt. But debt investing is very complicated. For most retail investors, I would tell you guys, just don't be in debt. Like you don't want to be in the bonds of companies unless like you really know what you're doing and you're talking about, So
okay. How did you guys find each other?
Our mutual love of bag holding for Palantir.
Palantir, yes, that was the first. If you just type on YouTube, this healthcare IT professional Palantir Amit, that was the first interview we did in January 2022, and we just kept talking from there. And then February 2022, we started Palantir Weekly, and the rest is history. What do you think of the Clear Value Tax Channel? You know the channel?
No.
You don't know it? It's like this dude that he just sits in front of the camera and it's like a Meet Kevin channel, but without all the hype that Meet Kevin brings.
No, don't know it.
Okay. I think he's cool. He's just another finance channel. Big audience. He talks finance. Why is Chris so swaggy?
I don't know what that means.
They're saying, why are you so swaggy? They're saying why.
I'm pretty sure I'm like the least swag person ever, bro. I'm not I'm not swaggy at all, dude.
Bro, I saw some of these gains in this group chat with these calls you showed today.
I'm not swaggy, bro. That's not swaggy. That's not swaggy. That's it. That was me flexing on you guys because I was telling you for months, like, you guys need to look at this. You need to get into it. And it was always like, whatever.
I just didn't pay attention to it, to be honest. But
Yeah,
next time
yeah.
I'm paying attention to whatever the fuck you show. These
Yeah.
games are getting ridiculous that you're putting up. What do you think about the SoFi 2 million FDIC insurance? So now any depositor under SoFi is insured. Also, Anthony Noto was on a fireside chat with Bank of America VP, head of global research yesterday, and he said we're getting more deposits than ever. Any thoughts on SoFi kind of seeming like they're going to be okay?
Yeah. That's a good move on SoFi's part. SoFi is definitely going to attract a lot of people, in the way that they're doing things. And a lot of rich people too, right? Because remember, everyone's covered up to 250 for regular FDIC. So if you're getting to 2 million, that means that you're probably gonna get like some higher, I don't want to say higher tier, but higher income people into joining SoFi, and the deposits are probably going to grow like crazy too. So that should really help SoFi. So I don't know. I'm still leery about their exposure to personal loans, and that's the thing that scares me, because the minute those delinquencies shoot up, these same people who right now are attracted with deposits can also at the same time withdraw their money, causing a bank run on SoFi.
Yeah.
And at the same time, now SoFi has to liquidate their personal loan portfolio, which is even more unsecure than the MBS, which are agency backed, and the treasuries, which are federally backed. So it would be even worse situation for SoFi. SoFi, like, you got to remember, a lot of these businesses all run on confidence, and the more confidence you can give, that's good. But the minute that the confidence goes, like, boom, you're out of it too. So if those personal loans end up taking on water, and they end up showing up in, like, let's say in earnings or whatever, that could be a really bad sign. And then you have pretty much a bank run on SoFi. And unlike the other ones that had valuable assets in a personal loans, or I don't know, people probably give you like 20 cents on the dollar.
Yeah.
Yeah.
No, that's fair. Chris, what technologies do you use at work? Programming languages, etc.
A lot of SQL.
Okay. Someone, I can't find the comment, but they said
Oracle, like I work with Oracle databases, SQL. So there's like things like that.
Okay. Someone asked this. I don't see the comment anymore, but they said, what was the first stock you bought and how did it go?
Me?
Both of us. I can go first. I mean, I bought Plug Power and Neo. Those were like the first two stocks I bought, like at $1, under $1, $2. They both basically like 30x in a year. Like literally, Neo was 60x, and I sold them for 2x because I was like, oh, I made double my money. So yeah,
nice. Okay,
that's not nice. I missed out on a 30x in a year. That sucked.
Yeah.
Like,
no, I mean, it happens. You learn from your from your losses. Like, okay, I made some of the best gains I made were in Ford Motor Company.
really?
But it was, because after the whole pandemic crash, Ford was the only auto manufacturer in the United States that didn't go bankrupt at the time. So there was a potential to make a lot of money. And I was following Alan Mulally, who was the former CEO of Boeing. And he was really good at turning around companies. So he did really well at
This
Ford.
is in 2008 or 2020? 2008. Right?
I bought it when I got out of the army. So around 2010-ish.
Okay. Gotcha.
Yeah.
That was the stock you did the best on, Ford.
Yeah. At the time. Yeah.
Okay.
When will Limp Bizkit touring again? I don't know.
What?
It's like, when is Limp Bizkit touring again? Dex.
Oh my gosh.
I'm more of an Incubus fan, so whatever.
Okay, process and valuing a company for both of you.
I think it's definitely changed. I've evolved from time to time. Back in the day, I used to be very like, okay, I want to look at the growth of this company. I want to figure out why it's an important company, and I'm just going to throw money at it blindly. So that's what a novice investor does, right? You hear like, oh my God, this is the next big thing. So you're like, oh yeah, I'm going to buy the stock, and that's it.
Yep.
And the valuation was like secondary to investing in just the idea that this is going to be a big thing. So that was stupidity on my part, right? Um, on the other hand, once I became a little bit more intelligent, I realized that, hey, balance sheet, cash flow statements, they all matter way more. So as I research companies, the first thing I still do is I look at the market potential for something to be really big. But at the same time, I also look at the company's fundamentals and see what's in those fundamentals that make this a valuable company going into the future. And is the business executing properly? Because if the business is not executing properly, they're not generating cash flow, or even if they're negative cash flow, if they're not trending in the right direction, that's a problem.
Yeah.
So yeah, those are the things that I highlight, and then I look at the leadership and see like what kind of leadership experience do they have. Then I look at the other intangible stuff that you don't necessarily see, like what is the competition like what is the broader market that they're trying to compete in, like all those things that get factored in, and then after that, it's usually like, okay, what would I value it in? And then this is where things like alpha spread tend to
Have value and
help.
purpose. Yep.
Yeah. So I use alpha spread to like really figure things out, and then after that, I'll probably buy or sell based on that.
Yeah, for me, I think I was in the same boat as you a couple of years ago, where I just bought something to buy something, and then what I noticed, what I was doing, and this is the problem, this is why I missed out on the Neo gains in 20. It's like I would just sell it on a random day because I feel a certain type of way, and that was unsustainable. And you start not only losing money, but you start missing out on the gains, and then you want to get back into the stock. And like, well, this doesn't make any sense. You can't keep running back and forth. And so I think my 3-step simple process now, I actually start at leadership. No, I start at, is there something exciting about the company first? So if we do SoFi as an example, the AWS of fintech, that besides the personal loans and all that stuff, AWS of fintech was super exciting to me. That's the only reason I even looked into it in the first place. Then I saw all the other parts of the business. So the first thing is, what is the core thing that makes me excited about it? Then I go to leadership, actually. I go secondary to leadership. And I'm like, can I trust Anthony Noto? Can I trust Alex Karp, right? Do you want to trust Sundar Pichai with your capital? Because you're trusting these guys. These are the guys or girls that you're trusting with your capital. They are responsible to move this forward. And then third is the growth. The P, for example, Enphase at a 44 PE, but it's growing 70%. That's SMCI, 6.9 billion in revenue, but $5.8 billion market cap. Robinhood, $6 billion in the books. Then I look at all the other stuff, and I'm not even the best at looking at all the numbers yet. I'm learning. And that's why I love talking to you, because you help me understand that stuff a lot more. But I think those are my 3 steps. And then I decide, am I willing to hold this? Like, am I actually willing to hold this? Because if I'm not willing to hold Microsoft, I know in my heart of heart, I just don't like Microsoft that much. So I'm not going to buy it, even if it checks off the other boxes.
Yeah.
And then make the decision. That's it.
I just want to add, are you still holding an Appcelera? Yes, I'm holding Appcelera. That is one of those things that I will not look at every day. I know it's going to be 10, maybe 20x, or it's a very speculative play, but at the same time, everything is trending in the positive direction. And this is one of those things that it's just like, buy it and forget it. And 10 years around, you'll wake up like, management is good, company's fundamentals are solid, the technology is proven. Like you can't go wrong with that,
Yep. All right, last question, and then I got to get out. Would you get back into Neo Emit? I bought it at 5, so I'd go all the way to 64, but held. Man, if you bought it at 5 and you were up at 64 and didn't sell, it sucks, right? But like, you believe in the company. 2021 was crazy, so don't beat yourself up too much over that. I would not sell it, because if you're at 5, I think 5 is a great average, and even if it goes to 15, you've got your 3x again, which in the bull market, it'll probably go back to 15. I don't know if it hits 20, 25. That might be a little harder with increased competition, but I think 15 is possible. I would not buy it again at $8-9 with the China risk. It's just not as exciting. The opportunity cost, I'd rather get into Tesla. But if you got it at 5, I would just hold on to it and just let the bull market take it back to 15 or 20.
Yeah. Josh, I'd stay with Appcelera. I did so much research on Appcelera, on all the products that they have, all the business model that they have. They are a perfect diversified research play. They have technology that can help like infinitely do the research that's required. They have the ability to scale up their business, and they are scaling up. You got counterparties that are just on another level. Like literally everyone and their mother, like Pfizer, like you name a pharmaceutical company, and they probably have a research partnership with them on a antibody. So huge levels of diversification. The only thing is it's just brand new, right? This is a very new company. So I'd say about 5% of my portfolio is Appcelera. 5, which is enough.
Okay. That's it for us. Thank you, 207 people, for being here. We had about 200 yesterday, so that's awesome. Thank you so much for being here. Late Night Stock Talks will be back again tomorrow, 9 p.m. tomorrow, not 8 p.m. 8 p.m. only on Wednesdays, 9 p.m. every other day. And that's it for us. Chris is legit my favorite stocks guy on YouTube. I love it.
One last thing about AppCelera that you guys will love. Shit ton of insider buying. I mean, I'm talking about crazy levels of insider buying. Really, if there is one company that you want to be in for like the next 10 years, it's AppCelera. But I'll tell you right now, if you're looking for an easy double, triple, quadruple, it's not going to happen right away. They're still in a lot of research mode. And the minute like a lot of their products, they end up going to their pharmaceutical companies, and the pharmaceutical companies do their clinical trials. The minute they get approved, you've got a nice long tail of royalty streams that are going to be coming in. And I'm talking about like more than a few $1 million a year. So it's going to be big. So I would say AppCelera long term is like a perfect company to buy into. Even their management, like I said, it's just, let me just pull it up real quick while we're still
I got to go. I got a meeting.
All right. So another time.
All right. Well, we'll do it tomorrow. Thank you, everybody. I'll see you guys. We'll see you guys tomorrow.
Later, guys.